Stocks sell off in a broad-based de-risking, 4:24 p.m. Eastern Time, October 28th, 2020, at briefing.com. The S&P 500 dropped 3.5% on Wednesday as heightened growth concerns exacerbated de-risking efforts and the recent negative momentum in the market. The Nasdaq Composite fell 3.7%, the Dow Jones Industrial Average fell 3.4%, and the Russell 2000 fell 3.0%. Similarly, no sector was spared, with losses ranging from 2.4% in real estate to 4.3% in information technology. The weakness started in the futures market after European markets opened to the news that Germany and France were preparing renewed lockdown measures to curb the spread of the coronavirus. Germany's DAX dropped 4.2% on Wednesday versus a 3.0 decline in the Europe Stock 600. The coronavirus path in the U.S. is tracking in the wrong direction, leaving investors worried that more cities and states could adopt similar measures. With a stimulus deal unlikely to come before the election to mitigate the financial difficulties many businesses and households are facing, the market presumably started to rethink future earnings growth. Most Q3 earnings reports continue to exceed expectations, but the reactions remained disappointing. Granted, Microsoft, trading at $202.68, down $10.57, 5%, did guide revenue for its fiscal second quarter below consensus, and MasterCard, ticket MA, trading at $291.38, down $25.73, or 8.1%, was one of the larger companies that missed expectations. Shares of UPS, trading at $155.78, down $15.06 or 8.8%, dropped nearly 9% despite beating top and bottom line estimates. The Dow Jones Transportation Average fell 4.3%. If that wasn't enough to deter sentiment, Pfizer PFE, trading at $35.45, down $1.98 or 5.3%, delayed the release of its phase 3 vaccine trial results, which were expected this week, and the CEOs of Alphabet, Google, trading at $1,516.62, down $87.64 or 5.5%. Facebook, trading at $267.67, down $15.62 or 5.5%. And Twitter, trading at $48.56, down $2.71 or 5.3%, testified before the Senate Commerce Committee on Section 230 of the Communications Decency Act. Interestingly, the longer-dated treasuries gave up early gains to those little changed. The 2-year and 10-year yield both finished flat at 15% and 0.78%, respectively. The U.S. dollar index advanced 0.6% to $93.46. WTI crude futures fell 5.3%, or $2.10 to $37.45 per barrel, amid the stronger dollar, bearish inventory data, and demand concerns. Separately, the weekly MBA mortgage applications index increased 1.7%, following a 0.6% decline in the prior week. Looking ahead, investors will receive the advanced estimate for Q3 gross domestic product, the weekly initial and continuing claims report, and pending home sales for September on Thursday. The Nasdaq Composite plus 2.27% year-to-date, the S&P 500 plus 1.3% year-to-date, as well as the Dow Jones Industrial Average, now down 7.1% year-to-date. The Russell 2000 down 7.5% year-to-date.